This will definitely affect almost everyone who trades crypto. Even if you don't live in Europe, because as of July 1st, the MiCA transition period in the EU has ended, and the crypto market is entering a new phase. Some exchanges are losing access to European clients. The stablecoin USDT is currently facing new restrictions, liquidity is starting to flow toward other platforms, and smaller alternative cryptocurrencies could face additional pressure. In this video, we will provide a breakdown of what has happened after July 1st. What will the future hold for Binance, Bybit EU, USDT, USDC, and EURC? We will also explore which exchanges are likely to emerge as winners and where the liquidity could go. How could this potentially impact the price of Bitcoin and alternative cryptocurrencies? And most importantly, what you carefully examine at this very moment so you don't end up in a situation where your exchange, trading pairs, or go-to stablecoin suddenly become completely inaccessible to you. My name is Victor, and on my public Telegram channel, I break down news like this, analytics, and major market changes, as well as specific trading setups, entry points, stops, and trade management. Everything is in the private channel. Well then, let's start a full breakdown of the situation. An event has already occurred in Europe that many are still underestimating, and quite significantly so. This event directly impacts liquidity, trading pairs, stablecoins, and even where traders will be opening positions in the coming months. As of July 1st, 2026, the MiCA transition period for the European markets in crypto assets regulation ended in the EU. And it's important to clarify one thing right away. MiCA didn't just appear on July 1st. The main rules took effect earlier, but it was on July 1st that the grace period closed, during which crypto exchanges, brokers, wallets, and other crypto companies could operate under old national registrations while simultaneously trying to obtain a full European license. Now that window is closed. This means that if an exchange wants to properly serve clients from the European Union and the European Economic Area, it is required to obtain a CASP license or MiCA authorization. If it doesn't have one, restrictions begin. Not necessarily in a everything shut down in a second format, but in fact the company can no longer freely work with European clients as it did before. And here's what's important. Many think, so what? That's Europe. I trade crypto. I have Binance, Bybit, USDT. Everything will keep working just like it always has. But the market doesn't quite work that way, because regulation isn't just about paperwork, right? It's about liquidity. And liquidity is the lifeblood of the market, the crypto market. When some traders lose access to their usual exchanges, the market begins to restructure itself. Some are withdrawing funds, some are converting USDT to USDC or EURC, some are moving from Binance to Kraken, OKX, Coinbase, Bitpanda, or say Bybit EU, while others are going completely on-chain to decentralized platforms. And all of this is creating a very significant redistribution of capital. The main story here, of course, is Binance. Binance is recognized as one of the most significant sources of liquidity for the entire crypto market. And it was Binance that was unable to successfully secure the European MiCA license by the deadline. This doesn't mean that users' money should simply disappear. No, assets shouldn't just vanish, but some services, new operations, trading, products, and access for European clients could be restricted. And it seems to me that a real battle for users, for capital, has begun. Imagine the largest exchange in the world loses the ability to properly serve a part of the European market. What are the competitors doing? They're starting to take over this flow. Coinbase, Kraken, OKX, Crypto.com, Bitstamp, Gemini, Bitpanda, Bybit EU, all licensed platforms now have a chance to take a share of the liquidity that used to be on Binance. This could be called a real hunt for users. And there's an important point here for the average trader. If you trade actively, you don't just need to read the news, you need to understand where the liquidity will go. Because where the market liquidity goes, that's where the trading volumes follow, along with superior trade execution, tighter spreads, and of course exciting new opportunities. That's why I always say it's important to look not just at the chart, but also at where the capital is, because price very often goes where liquidity is shifting. Now, specifically about Bybit, many are saying now, well, Bybit got a license, so everything's fine. But there's a very important nuance here. Bybit Global and Bybit EU are not the same thing. Bybit EU did indeed get authorization in Australia, but that doesn't mean the European version fully mirrors the global Bybit. Derivatives, perpetual futures, copy trading, trading pairs with USDT and other products might differ. So if you're, say, a professional master trader on Bybit, if you use copy trading and if you're used to working with USDT pairs, you need to check and verify very carefully what exactly is available for you to use in your jurisdiction. Because the exchange is working and all my tools are available are two different things. And this is the key point that many people miss. Regulation might not block your exchange entirely, but it could remove the very product you were using to make money. For example, leverage trading, specific pairs, copy trading, or working with particular stablecoins. Right now, the hottest topic is USDT. Under the new MiCA rules, stablecoins must meet the specific regulatory requirements set by the European Union. And USDT is currently not considered a fully compliant asset for the regulated European market. That's why some major cryptocurrency exchanges are already removing specific USDT trading pairs, restricting the ability to buy and sell, or moving their users to USDC or EURC. This means that in many cases you can probably continue to hold or withdraw USDT, but actively trading it on regulated European exchanges is becoming increasingly difficult and restricted. And this is exactly where one of the main winners of this whole mess emerges. And that winner is Circle. Circle issues USDC and EURC. And these particular types of regulated stablecoins now look like one of the primary beneficiaries of MiCA. Because if European exchanges start moving away from USDT, they will need a reliable alternative, and that alternative is rapidly becoming USDC and EURC. This doesn't mean that USDC will overtake USDT worldwide tomorrow. No. Globally, USDT is still an incredibly massive force, but within Europe, the share of USDC and EURC could expand quite significantly over time. And that is already an important and clear fundamental signal. If you look at the market not like a gambler, but like a professional analyst, you can see an entirely connected chain of events here. New regulation is squeezing USDT in Europe, and major exchanges are switching to permitted stablecoins. Demand for USDC and EURC is rising, significantly strengthening Circle's position. Investors now see this company as one of the main beneficiaries of the new European regulation. This is already a full-fledged investment idea that is well worth keeping a close eye on. But let's be honest, for the crypto market itself, this isn't a clearly bullish story. For Bitcoin, the impact might be quite limited. BTC is the most deeply established, most liquid, and most institutional asset in the crypto market. It has survived FTX, bans, regulatory wars, and bankruptcies. So MiCA on its own shouldn't be a reason for a global Bitcoin crash. And Ethereum will also likely get through this period relatively calmly, though pressure might be felt through liquidity and stablecoins. But alts, especially low caps, depend on liquidity much more heavily, particularly those where the main trading happens through USDT pairs with many retail traders, leverage, copy trading, and thin order book depth. If some users are forced to close positions, change exchanges, switch from USDT to USDC, or simply reduce risk, what do you think they'll sell first? Usually not Bitcoin. Usually they sell the riskiest assets. And risk, of course, means alts. So in the short term, MiCA could be a pressure factor for small coins and low liquidity pairs. And here, another important effect emerges. When regulation starts to squeeze centralized exchanges, some capital begins moving on-chain, meaning decentralized trading. But this is not happening through traditional centralized exchanges. Instead, it occurs through decentralized protocols like Uniswap, Hyperliquid, Lyra, and various other platforms where traders maintain full control over their own funds and interact directly with the blockchain. Consequently, the more restrictions we see placed on centralized platforms, the higher the interest will be in robust on-chain infrastructure. And this could mean that decentralized exchanges and on-chain protocols become one of the main beneficiaries of the new regulatory environment. By the way, regarding Hyperliquid, I shared my detailed buy setup and analysis in the private chat back in early April. Since then, the price has already surged significantly by approximately 117%, and the position remains fully active and open at the moment. Now on the screen, you can see a visual screenshot documenting this specific trade from the private group. These are exactly the setups with entry points, stops, targets, and further follow-ups that I post in the private chat. I'll leave all the links in the description below this video. Regulators want to make crypto more strictly regulated and controlled, but sometimes such actions, on the contrary, speed up the user shift to where control is harder. It turns out to be an interesting paradox. Europe wants to make the market safer, but at the same time it might push some active traders on-chain or to other jurisdictions like Dubai or the rest of the United Arab Emirates, where the crypto business has long felt much more open and much freer. And here we come to the main question: is MiCA good or bad? If you look at it from the perspective of user protection, reserve transparency, licenses, and fighting blatant scams, there is of course logic in it. The market is maturing, institutional players need clear rules. But if you look at it from the side of competition, innovation, and small startups, it's not so pretty, because large companies with law, capital, and offices in Europe will survive this regulation, while small projects might simply disappear. And in the end, the market becomes cleaner, but at the same time more concentrated. Less mess, but more power for the big players. For a trader, the takeaway is simple. First, check which jurisdiction your account belongs to. If your account is verified with European documents, the exchange will treat you as a European client. Second, check if your exchange has MiCA or CASP licenses, specifically for the legal entity that serves you. Not just the brand, but the specific company. Third, check USDT pairs, especially if you trade futures, copy trading, or hold working capital in USDT. Fourth, don't keep all your capital on one exchange and in one stablecoin. Now, diversification is not a textbook theory, but a normal protection against operational risks. Fifth, keep an eye on liquidity. If volumes move from one exchange to another, it can change market behavior, spreads, volatility, and even the quality of trading signals. My personal conclusion is this: MiC is one of the most important moments for the European crypto market in recent years. We have already entered the phase of liquidity redistribution. Binance is losing part of its European advantage. Licensed exchanges are getting a chance to take over users. USDC and EURC are strengthening their positions. USDT remains globally strong, but in Europe it faces serious restrictions. Alts could face additional pressure if traders start reducing risk. Therefore, it's important now not to guess, but to observe the facts: where the volumes are going, which pairs are being disabled, which exchanges are getting inflows, how USDC, USDT, EURC behave, and if there's a reaction in the price of Bitcoin and alts. As for the market reaction to the price of Bitcoin and alts, in my public Telegram channel, I will continue to analyze all key news, analytics, and market consequences of MiCA, and specific trading setups, entry points, stops, and trade management, as always, in the private chat. Always remember, at such critical and important moments, the market usually punishes those who just react to headlines and instead rewards those who truly understand where the liquidity is actually flowing. If you found this video helpful, then please be sure to like and subscribe for more updates. See you soon.